Episode 7. Yeah. Here we are. What I'm going over, I think it's displacement manipulation. But whatever it says in the title, this is what it is. Displacement manipulation. Displacement is basically when the market makers are like, okay, let's get the fuck out of here. Manipulation is like, okay, we're just gonna get you bozos out of here and then we're leaving you. That's what it is. I'm like 2 meters away from my chair right now, so if I sound a little distant, that's why. But just go ahead and give me a minute to clean up real quick, doing something. But give me about like 10 seconds. Hold on. Just go ahead and stare at that chart. Find the chart real quick while I do that. Okay. I think I'm ready. Here we are. Displacement manipulation. All right. Like I explained earlier, manipulation is basically manipulating the dumb money or the uninformed speculative uninformed money. That's what manipulation is. Whenever the smart money is like, okay, we're gonna, get that little dumb money out of here. We're gonna, take out that low and, steal their orders, and then we're just gonna make them, have a fear of missing out by displacing. Okay. Displacing is whenever you see the market moving extremely fast. Okay. That's what it is. Whenever you see the market moving extremely fast while creating fair value gaps, you'll be learning what fair value gaps are in the future. You will. Actually, if you want to see, literally right after this. Right after this, you're going to be learning what fair value gaps are and the creation of a fair value gap. I'll give you the idea of what it is. But, I will not be teaching you what it is. I'm just teaching you what displacement is and what manipulation is. Easy? Okay, easy. Easy, right? Back to Euro. Now, manipulation is, well, I guess you could say, manipulated and dumb money, okay? So it's taking out some sort of liquidity before displacing, okay? Because before displacement, there's manipulation, always. Before displacement, there's manipulation. Because if we look here, you see this little low here? If I remove this, right? If I move this here, high. See how price comes into this low right here? Right there. It comes into that low. It manipulates the dumb money. Comes straight into this low. Bam! And then it displaces, okay? With fair value gaps, okay? It's moving fast while creating fair value gaps, okay? If you want to call it displacement, it has to be moving fast and it has to be creating fair value gaps. Actually, it doesn't even matter if it's moving fast. If it's creating fair value gaps while, I guess you can say moving fast, but if it's creating fair value gaps while moving, that's displacement because that's the only time it occurs. Whenever there's too much of a certain side of liquidity, okay? So whenever there's too much of, buy side, bullish fair value gaps will be created. Whenever there's too much of sell side orders, bearish fair value gaps will be created. Simple, okay? Because here on this little run here, if I draw a little box, oh no, he's drawing box, support and resistance. But if we draw a little box, right, with coming to this little up move here, with these red candles, these are fair value gaps. 1, 2, 3, 4. And these little gaps in between the candles are fair value gaps. You'll learn more about them in the next episode, like I said. But you see how price, even in hindsight, you can see that price is moving fast. It's going up. It's not going anywhere else, but it's going up. But if you look around here, you can kind of see how it's moving slow. If you look, it's like moving very slow, not too fast. Even in hindsight. But seeing it live, it's even more amazing seeing it live. But looking here, this is manipulation. When we take out a low, and then we displace. Okay. That's manipulation right there. This right here, we take out a low, and then reverse, or take out a low and then displace the other way, that is manipulation, okay? And displacement will be this here. Boom. That's displacement right here. That's displacement. Now you probably get a better understanding once you learn about fair value gaps, but that right there is displacement. Let's go over some more examples. And also, don't worry about my drawings because I do analyze on here. Don't get it too confused. These are just random levels. Go ahead and have in the back of your head that these are some stupid levels and JJ doesn't know what he's talking about. Okay? Just go ahead and put that in here. Anyways, here we are. So, manipulation and displacement occur here. So, we are manipulating sell-side liquidity, which is, stop losses of sell orders when it comes to dumb money's orders. We come and take out that low right there. Boom. So that's manipulation. We manipulate into this low. Then, later, when New York session kicks in, we immediately displace. Because there's a fair value gap there, and there's another fair value gap there. So we manipulate, come up, and then we displace even higher. Amazing, isn't it? Pretty cool. Let's go over some more. If I can find another example. But here, we came and took out this high. Bam. and then we displace, moving fast. Because it may look weird to you, but over time you can see in hindsight when price is moving fast. If you don't know what hindsight is basically like looking at fluctuations in price that have already occurred. So we're looking at the past. We're looking at fluctuations in price that have already occurred because it's in the past. Okay, that's all hindsight is. But hindsight is basically seeing stuff that has already happened. If you want to search up what hindsight is, sure we can. Hindsight. Hindsight. Understanding of a situation or event only after it has happened or developed. That's basically what I just said. Okay, we're just going over what has happened. That's what hindsight is. But back to the charts. We manipulated into this high. Boom. Tripping the dumb money in, or the retail trader in. These are stop losses and pending orders resting above that high. We're like, oh, take out that high. And then boom. Give them some FOMO. Give them some fear of missing out. And look at that. It just dumps. Continues dumping after that, too. Another example. Here. See how we got these two highs here? These relative equal highs right here. Boom. Price displaces up into them. And remember, price can displace and manipulate at the same time. So it manipulated while displacing into these highs. So I guess you can call it manipulative displacement. I guess you can call that what that is. That's a new name for it. Manipulative displacement. That's what that is. So it displaces while manipulating these highs here, manipulating into these highs. And then what does it do after? It immediately reverses and displaces. Boom. And it displaces even further right here with this other manipulation here. Simple. Want to go over another example? Sure. Why not? If I can even find one right here. See how we take out this low here? You can even see it. That low there. We take it out. Let's zoom in so you can see it. See how we come right below that low where stop losses and pending orders are resting? Came right below it, and then eventually when New York session came in, boom. This is just gone. Boy. When did this even occur? Because was I here to see that? Hold on, I'm having flashbacks. Wait a second. Friday 23rd, August 2024. Was I here for that? I don't think I was there for that. I'm not sure. I have no clue. I don't know if there was an economic event or something, but I don't remember seeing that before. But anyways, going back into the charts. Here I think manipulation occurs here. Yep. It's very, very minuscule, but it's right there. Price comes up and takes out that high. And then what does it do after? It displaces away from it, giving the dumb money fear of missing out. It manipulates the dumb money by taking out their stop orders. Oh no, we got stopped. What's gonna happen now? Oh no. And then price just displaces away. That's hilarious. Let's find some more examples. Here, price manipulates this low, taking out the retail traders with the dumb money stop losses and pending orders, and then it says bye-bye and leaves them. See that? Bye-bye. That's gone. Bye-bye. And it still heads higher. Yeah, imagine the amount of FOMO you would get. If you were a retail trader, imagine the amount of fear missing out you would get after seeing this. You'll probably be crying after getting stopped and then seeing this. You'll probably be crying. And it still happens when it comes to smart money traders or ICT traders, because you could be on the wrong side of the market. You could use the wrong confluence. You can use the confluence incorrectly. You can use certain things wrong when it comes to ICT traders. So you can be liquidity sometimes. You can. So you have to understand what you're doing. And what I do, honestly, I just missed a trade today actually. From I woke up too late. I think I woke up around like 8:12, and I didn't have enough time to analyze. But I was like, you know what? I think price is gonna go down on gold, and we're gonna see what happens. So, as a matter of fact, let's go to gold and see that. This was today. This was recently. I woke up a little too late. Yeah, too late. And I was like, you know what? Price is gonna go down. And I think I had my sell about right here, and I had my stop above this high, and then it completely ran through it. It went the other way. So when it comes to learning these concepts, you have to give yourself some time. And wow, market just closed 53, 54 seconds ago. But when you analyze, you have to give yourself some time to analyze and really process what's going on to understand what you're looking at. You have to process it, really think like, okay, what is price doing? Why is it doing it? How is it doing it? And what is its purpose? What does it want to go first, and where does it want to go last? Simple. Very, very simple. It's nothing hard at all. Anyways, I've been recording for literally 10 minutes now. This is the 10-minute mark. But I'll be in this recording here, and I'll see you on the next episode. Peace.